What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 13th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're not going to be diving into Bitcoin testing right up near that $50,000 level we called for here in the month of February, but outside of that as well, talking about the broader DeFi space and how we're focusing more towards the small and mid-cap plays as liquidity is circulating down throughout the altcoin cycle, and how we could have a potential major player within the DeFi space coming up. And outside of that as well, a lot of major developments on the institutional side. We've got all of that and more to talk about right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2020 tax season is here. Calculating taxes on cryptocurrency is complex and time-consuming, but TaxBit has made it easy by automating the entire process. Link your exchanges and wallets to seamlessly pull your transactions through their tax engine and auto-generate your tax forms. Aside from automating taxes, TaxBit provides crypto enthusiasts real-time portfolio tracking and tax optimization visibility so that you can make tax optimization crypto trades throughout the year. If you're looking to stay IRS compliant, have real-time portfolio visibility, and save money on cryptocurrency taxes, then TaxBit is the platform for you. Check out the link down below in the description for more information. Alrighty, everyone, so let's go ahead and dive straight into the content here, taking a look across the market here. Before we dive into CoinMarketCap like we usually do here on the channel, we usually try to take that broad look over the market. I gotta spend some time to just take a look at this chart because I think Bitcoin here is defining to us right now the kind of momentum that the market is showcasing. We had talked back here at the beginning of this month, so we're getting, just bear in mind, just about 2 weeks into the month of February. We talked back here at the end of the month in January about Bitcoin possibly breaking out above this line of resistance here, which was previous support and previous resistance in the past, making support on the previous line of resistance here that had weighed Bitcoin's price down back throughout the month of January, and popping out to test up towards a big even level of $50,000. Well, technically, we haven't hit the exact mark of $50,000, and that's not really the target here. The target here in this case is to hit somewhere around that range, that we can get up towards near that $50,000 level. And who knows, we might actually hit it here in the next couple of days. But I have to say, guys, to see Bitcoin testing up, and you can see from the actual numeric value up here on the screen when I hover over the candle, we got to $49,000 for Bitcoin's price, even quicker than our assumption that it would happen by the end of the month. So the market is blowing out our already optimistic estimations, and it's showcasing here that due to companies like Tesla coming in and changing that dynamic, and further rumors of companies like Apple and other players in the tech space coming in and using Bitcoin as a corporate treasury asset, it's going to get more and more momentum, and we might start to break away even from the optimism of some of the data science models that Bitcoin has. But I want to go ahead and emphasize a key point here. It's also true for altcoins here. Altcoins are continuing to gain market dominance, broadly keeping up with Bitcoin here. And not only that, they're outpacing Bitcoin. As we can see here, taking a look at the daily chart here, we've rebounded back up any of the losses we had from back here in early February as Bitcoin leaped up off the Tesla news. Altcoins have regained that momentum, coming back and setting a new relative high since back here, generally in between the October and November range here. So again, looks like we're setting to charter up towards those higher levels for altcoins. And the really cool thing is if we just take a step back, take a look at the weekly here, and turn on our drawings, we can see we've been talking about this for some time. Ever since we got the rebound here after the first week or two, we wanted to see that we're going to be coming in for the third higher high here in this case for Altcoin Dominance comparative to the previous two that we set back here, one back in January, or really early February of 2020, and here in August of 2020. So now we're going for that third one around the 48 to 50% dominance range until altcoins swallow up half the market dominance. In this case, we're keeping bullish on altcoins here. And the really cool thing about this is that I believe Bitcoin, again, we don't want to say that there's going to be a clear top at 50K. We don't want to be too gun-hot on that because big evens have been smashed left and right here. Prices have been continuing to climb. And if Bitcoin continues to climb, this is just going to mean that as altcoins are gaining market dominance, they're also going to have more market capitalization to gain here, right? Some major gains here if we're going from around 38 or 39% market dominance to 50%. It means we're literally just getting started on this. We're about halfway through here. So very exciting stuff here. And we can see this showcasing through Ethereum. Ethereum is constantly pressing up higher. It broke through this generally bearish pattern, in this case, of an ascending wedge, and actually made it support, and it's continuing to climb higher. The only thing I'd like to see here, again, we're just looking at Bitfinex, is more volume. I would like to see some more volume coming in on ETH, and I think you'll get that if we break above that $2,000 level, which again, we've been calling for here in the relative future in February. So it looks like we're pretty much on pace for that if we even continue this kind of slower momentum up here towards the middle part of the month. And this is coming at the time as more people are not only purchasing Ethereum as possibly a treasury asset, as a speculative investment, whatever you may see it as, but along with that, there's a ton of people, over $5.5 billion worth of ETH that has been staked for ETH 2.0, and the ETH 2.0 being contract in this case, the deposit contract to get ready for the move to proof of stake. And a lot of people are getting in early. They're locking in that ETH in the contract in order to get that yield, as it does decay as you get in later and later into the process. So I'm very, very excited to see this. Over 2.67% of the total ETH supply is going into the contract. Now I want to spend some time here though to dive in, because Ethereum itself is performing well, Bitcoin is performing well, but as you all know, we've been gun-ho on the altcoin market since the last few months, getting prepared after having that dip in the altcoin space, building our positions, accumulating, and getting ready for this rally. But the important thing to keep in mind is that it's very likely we're just getting started, guys, especially as we talk about the circulation of capital from the large caps in the altcoin space, the tens of billions of dollars, down to the billion-dollar plays, the multi-million-dollar plays. These are your mid and small cap plays when it comes to market capitalization, which is what really matters. It's the total value of the circulating supply. And we can see here, they're going across the board here. There are a ton of altcoins over the last 7 days that have performed phenomenally well in the market. Very few exceptions down here in the red. So as we go back up here, what we'll notice is that a lot of these plays, not all of them, but most of the plays here, except for a few exclusions, are generally speaking, small caps. So now we're starting to see that liquidity surge to the smaller cap plays where we have higher chances of multiples. And there's one project which I really think has got a good chance of possibly stealing the spotlight. And to be fair with you guys as well, I have worked as an advisor for the project here, so I'm not going to be completely ignorant of the fact that I have, in this case, a bit of a bias. I've worked with the project, but I really genuinely like what they're doing, because they're doing something that, for me personally, is something that's fresh and new for the cryptocurrency space. So many of you know, for example, I like platforms like Uniswap. I like automated market makers that serve as decentralized exchanges in the crypto space. It's why Uni has been pretty much my largest position here. It's been one of my largest crypto plays in the cryptocurrency space. So in this case, Uni has grown. In this case, it's done great. And the AMM space of Sushi Swap, of Pancake Swap, all these different plays, they look really exciting and interesting. But in order to actually make these trades in these platforms, you need to have people who are providing liquidity, who are providing an equitable amount of different token pairs. An example would be something like ETH and USDC, so people can trade easily in and out of Ethereum and USDC. But in order to actually do this, people provide liquidity and they get what's known as LP tokens. So they deposit their tokens within the smart contract in this case, while also receiving LP tokens, which are sort of like IOU claims for those original tokens. And the really great thing here is that they give the ability to people in this case to go out and use those LP tokens. For the last few years, there really wasn't much use for them, but now there is. As we've started to realize here that if you take a stablecoin and crypto liquidity pair like ETH USDC, you actually could use it as a form of collateral and have a much lower degree of risk when considering a possible margin call or liquidation event. So this is really cool, and that's where Warp Finance comes in. Now, Warp Finance, again, as I mentioned, is a project I've been advising for. I joined back during the winter last year in 2020, and I was supporting them throughout the early days and stuff before they launched the protocol, before they went to doing their TGE, which they just recently launched, or their token generation event. And it's really cool. They've been launching some really exciting partnerships. They just recently integrated Synthetics SUSD. So in this case, there's more stable coins in this case that you can borrow from the protocol. And to just again explain this partnership kind of builds into the value proposition of Warp. To put it simple, Warp is allowing people in this case to lock up their LP tokens as collateral, like you could do with maybe say ETH on MakerDAO in this case, or on Compound, and being able to borrow a wide range of different stablecoins. And I kind of like this approach because instead of just doing a native stablecoin in this case, which would be something really exciting to look forward to that Warp might consider as a protocol, the cool thing about this is that it instantly allows you to get stablecoins that are already used across a wide range of different protocols, from DAI, USDC, Tether, and Synthetic USD in this case. So I really like this. The Warp token is actually launched here. You can read about it on CoinGecko if you want. You can check out the token contract, read through it. Overall, the price is opened up relatively good. Volume is relatively low at the moment, as there needs to probably be a little bit more liquidity down the line and stuff to the Warp protocol, but it is tradable on Uniswap if you guys are interested, and we will have it listed soon, hopefully within Digifox, which we're really excited to announce in that case. But again, I recommend keeping an eye on Warp here. I think this is one of those plays that's in the small cap range that's really interesting. And there's a ton of other small caps here that, again, guys, that you can go down the list, you can observe through CoinMarketCap, read through the projects, understand what they're doing, and see if it makes sense. See if what they're doing actually sounds like they have a unique selling proposition, that they're gaining traction, and that they've got room to grow. There's a ton of projects here, I feel, that fit into that category. So I'm very, very excited for the broader DeFi space as a whole. Now, talking more outside of the DeFi world and more into the institutional world of cryptocurrencies, we have a lot of major news. Deutsche Bank, and bear in mind in this case, a bank in this case who, I'll go ahead and I'll keep my comments to myself. I've actually been through Frankfurt a couple of times and stuff, and Deutsche Bank in this case is quietly planning to offer crypto custody or prime brokerage services to the broader crypto space. So no longer is it just the Coinbases of the world. No longer is it a variety of crypto exchange or platforms or niche banks or fintech companies that are supporting cryptocurrency services. We're now starting to see the big players step in. Ever since Germany established the law that allowed German banks in this case, like Deutsche Bank, to be able to custody crypto assets, they've probably been working on this stuff behind the scenes for a long time, especially knowing how slow some of these commercial banks move on some of these new technologies. So again, this is a major play here that, as the article states here, was hidden in plain sight by a widely overlooked report from the World Economic Forum. Some of this stuff has been in the works for a long time, is now coming to fruition. So there's more competition, and it's going to open up and make it a lot more comfortable for other parties to participate in the cryptocurrency space now that these banks are offering these kind of services. It actually, in a sense, if you think about it, gives them a direct on-ramp if they're providing brokerage and custody services now to deposit those assets through banks like Deutsche Bank. I personally wouldn't, but there's a lot of people who do bank with Deutsche Bank. So anyways, going on here as well, first North American Bitcoin ETF finally launches. Now, it's important to note the headline can be deceiving. As we Americans tend to do, we like to be self-important and think that, and this also speaks to a lack of geography sometimes. Some people think that North America is just America or the United States, but in reality, this is a Canadian Bitcoin ETF that securities regulators have approved here in Canada, and it's going to start trading in the relative near future. So the Ontario Securities Commission has gave its blessing on Thursday towards the first ever Bitcoin ETF throughout North America, specifically in Canada here, that's going to allow people, unlike an exchange traded note that can come with fees or restrictions, a fully open and accessible ETF for people to trade Bitcoin. And this is really exciting because it opens up the barrier for entry for a lot of people to participate and invest through brokerage services. And I know many of you are saying you're screaming to the roof and stuff, and now a lot of people have actually been more supportive of ETNs and ETFs now that Grayscale has started acquiring large sums. Look, I'm going to be honest with you guys. I personally would always advise people own their crypto, or they buy it through an exchange where they can at least be able to claim it and be able to withdraw it to their wallet. But there's a lot of people who are going to want to use brokerage services. The world's not gray. It's not black and white, guys. It's gray. It's nuanced. There's people who want certain types of qualities or ways of interacting with Bitcoin and cryptocurrencies. And if they just want to use it as an investment, it's not the end of the world if they want to go through an exchange traded fund like an ETF, right? So again, I think overall this makes sense. And again, it's really exciting to see these regulators starting to take more of a positive note, because I think this applies more and more pressure on regulators like the SEC in this case, who are a bit more hesitant or conservative. And the great thing is I think above all, and I actually take quite a positive opinion, I think the SEC is starting to warm up here to the idea. They've done a lot of great steps in the sense of really regulating the bad players in the crypto space, keeping open to innovation in the crypto space, while at the same time also supporting other elements outside of crypto, such as equity crowdfunding like we did for Digifox. I think that they're taking a more pro kind of investment thesis to opening up opportunities for people. So again, very excited to see what this will do, and encouraging other regulators to push forward the envelope of opening up more types of exchange-traded fund products for assets like Bitcoin or Ethereum and other crypto assets, rather than just exchange-traded notes. It'll add more competition and add more demand for the underlying asset, which I'm very, very excited about overall. So we want to see more market adoption. Now, Last but not least here, I wanted to spend some time again as well to talk about one of our sponsor partners here, and that is TaxBit. For those who don't know and stuff, TaxBit has been helping a ton of people for the last few years with simplifying cryptocurrency taxes, and they've been getting a whole swarm of different integrations as well as investors backing them. PayPal coming back here just in January of this year, backing TaxBit as a startup through their next raise. It's really exciting here to see so many large names coming behind TaxBit as a company. Again, you guys can read into the details here overall, but I think PayPal, with their move into crypto, is very excited to start investing in some of these companies throughout the crypto space and getting a piece of all the different companies that are servicing very specific focus points within the crypto space. And speaking of that focus point here, when it comes to taxes, it's something that we're all subject to in the U.S. as U.S. citizens. So if you guys haven't already, tax season is coming up in April. It's very, very important in this case to be ahead of the curve and check out TaxBit. You can plug in all your accounts for no cost, and only until you want to generate your forms. In that case, will you have to pay for an account. So give it a try, guys. See if you like it. If you think it's a service built for you, you can check out the link down below in the description. We've got a TaxBit code down there where you can get a discount on your account. And that being said, everyone, that's going to be it for today's video. I hope you guys have enjoyed this one. If you liked it, drop a like, consider subscribing and hitting the bell icon if you haven't. And until the next video, I'll see you all in the next one. Take care, everyone.